Hello there, my friends. Chris Marcus here with you today on Tuesday, June 27th, on behalf of Arcade Economics again. Thanks for tuning in as always. And today, just a quick video about whether it's a good time to invest in the stock market. I think that's in our culture something that's often on people's minds, especially as we see the stock market hitting new record highs and which sometimes is a little confusing when you think about really the underlying fundamentals, or at least the picture that we're presented with of the underlying fundamentals. Again, I don't have much, a decade on Wall Street didn't leave me with much faith in a lot of those government economic numbers where the formulas are changed, or if people give up, they've been out of work so long that they give up, they're just not counted anymore, and inflation formulas that things are switched out, so if the price of one is rising, it's no longer counted. So it's interesting in how it's often not so easy to get a true picture of what's going on. But the simplest way that I can think about it is that following the housing crisis, the market got clobbered till I guess that was when we had March of 2009. Maybe that was the first QE1, and then after that didn't really do much. QE2 was a big turning point in my economic mentality, which was, let's say, November of 2010, which was what precipitated silver's rise up to $50, which was a wild year for the precious metals in 2011, and hopefully will be similar with a different ending this year in 2017. Again, disclaimer, not financial advice. I'm just sharing my opinion and hopefully giving you some things to think about. In either case, when that money printing binge started in March of 2009, basically the markets have tripled since then. So that means the market saying that the overall economic productivity or value of this representation of U.S. commerce is doing 3 times as well as in 2009. I mean, we've blown past even the levels that seem like bubble territory. I think the Dow got to about 14,000 in October of 2007, maybe, which, remember that whole crisis started a year and a half before Lehman Brothers collapsed in 2008. So anyway, shortly before that all started to happen, Dow was at 14,000. Now it's crossed 20,000, 21,000. I don't even have the first clue where it's at today. But the challenge is that it sets up a not so easy environment for people to invest in, because on one hand, everyone sees people buying stocks and it's hitting records and kind of has almost that mania feeling from when it was similar to the real estate bubble or the dot-com bubble, where eventually at some point when you think, I mean, there's that trading standpoint, but also having some sort of fundamental idea of what is something worth and combining the two, yet in these bubbles, sometimes that gets lost and things get a little choppy. And similar with Bitcoin right now, where that's the real key, is knowing the difference between a bubble and when perhaps something is just emerging and actually has incredible value that we haven't grasped just yet. Telling the difference between the two can make you a lot of money. So that's what, anyway, we're thinking about to help come up with some ideas of how to get that thought process so that you can begin to see these things. So with the stock market, what's tricky is that I would say that it seems massively bubblicious, if you will, and at some point would have to collapse. Yet, given that we've seen a whole new arsenal of wacky banker tricks, which all in general can be translated on one level or another to printing money to cover up borrowing and other printed money, which can work short term. So, for example, let's say the stock market starts selling off, goes down to 19 or 18,000. Probably what you would see is the Fed come out and say, "Oh, we need QE5 or 7 or whichever one they're up to now." So it gets a little tricky because eventually print enough money and all right, maybe the Dow goes from 20,000 to 30,000, but if so much money has been printed and you begin to feel the effects of that inflation and everything is doubled in price, then in terms of what you can actually buy, you've lost your purchasing power. So there's a scenario where, let's say, the market goes down a little bit and they just press on the printing pedal again there. You could have a scenario where you see whatever number, you make it 100,000, 100 million, it doesn't matter if you're just adding zeros at the end. So you can make these numbers bigger or smaller. You can also manipulate markets, which goes on, which that's again why there's so much that isn't real. And when people just see the CNBC headline and don't dig deeper or question or sometimes just trust that inner voice that maybe all these years has been saying something seems illogical about this. And of course, because there's a lot illogical. And it creates a tricky environment for people. So what do you do now? I mean, now it's certainly possible that even in real terms, forget any inflation, but Dow could go to 22,000, 23,000. Who knows? Yet what I like to think about is the skew of the trade. Remember, you want to buy low, sell high. So when a market is hitting all-time highs, now if you could make a case fundamentally that says, well, wow, we still haven't even, which is what I've been attempting, which was what, I don't know if I've been doing it. I don't know if it's worked or not, but what I believe in silver, where even, when silver hit $50 or $49 back in 2011, when I looked at all the fundamentals of what was happening and how much money printing, how much silver, and just combined all these things, to me, I thought there was still more to go, and it wasn't a bubble. I think my best guess at this point, I'm excited about what's possible with the prices of some of the cryptocurrencies, because again, if you reach a point where people finally say, we get it, you're just printing, borrowing, and spending, there's some mass point where you hit that and enough people see that. So if people lose faith in the dollar, which again, I see as a matter of when rather than if, sure, then, because think about it, how many people do you know that actually own a Bitcoin? Even let alone even know about what it is. And that was what really hit me, is all this time I've spent working in finance and economics and thinking about this whole silver situation and just studying the history of markets. I didn't even own a Bitcoin until a couple of weeks ago. So from that standpoint, when you think of now everyone's using Bitcoin as a currency, so to me, there's fundamental reason to believe maybe it could be still early, and we haven't, bubble is usually when everybody owns something. So back to the stock market, I think there's a skew to which it can go higher, but there's also, like we saw with the mortgages, you could have that really big drop, which to me, again, buying at the top versus that's why I've allocated more towards the precious metals or things that I think might have a different timeline, yet what I like so much about metals is that before doing anything else, whether any mining stocks or anything else other than just having access to physical precious metal, I always like starting with that, and then no matter what happens, especially if you're just, even if it's buying a couple coins every month, or even one coin every month, but just something structuring so that you can live your life, you can save your money in gold or silver, and then, in my opinion, again, you gotta do your own homework and see what sounds right to you. But I think at some point, I don't know when that break point is in the markets, but it could be tomorrow, maybe it's 2 years, maybe it's 5 years from now. But again, if I'm living my life in a way that I can just leave it there and it's my savings, to me that seemed like a much better way to go than playing a little bit of a Russian roulette in the stock market, which, again, my personal view, I don't think the market is really that much more valuable. I think these are the effects similar to the real estate market when you print that much money that has to go somewhere. And who gets first crack at the money is the banks. And where the banks investing it, they're not giving out commercial loans as like in the old days, but they're buying government bonds and mortgages and stocks. And anyway, I wish there was a simpler way often, because I know people want sometimes, well, what should I buy now and how long is it going to happen or take for something to happen? If if I hear the timing, I'll let you know. I promise you that. Yet, what I can offer you that perhaps over the long run would be of far more value is just helping you see a good framework and mentality for trading and investing, so that you can structure things. So you don't have to worry about the short term, and you make good decisions over time, and usually works out pretty well. So with that said, go out, have a great afternoon. Thanks for watching. Hit the subscribe button. Hit it right there. Hit that one. Talk to you soon. Bye.